Well, hello there, all of you market traders and profit takers. It's another week of trading on the Forex, and I am your Forex University professor at yourforexuniversity.com. We're going to take a look at the week ending of August 1st, 2014, and we're going to take a look also at some of the trades that were taken this week. It was somewhat of a rough week this week, and I think it's a good idea to go over it so we can get a grip on it. It's not always necessary to show you all of the great profitable trades. That's not the real world. I mean, we did make a profit, but yeah, let's take a look at it. This is the week ending here, 8/1/2014. The Aussie, the Euro, Pound, the Kiwi, Canadian dollar, or the CAD, as it's called, the franc, and the yen. What hurt us? Now, we did finish with 189 pips at the end of the week, which is not bad, but let me just show you what happened this week. Notice we've got quite a bit of red spots in here. We had a couple of days where we had some small expenses we paid in the middle of the week. One of the things that really got us this week was the no entries. Look at all of the no entries in here. Zeros. And then, so when you get a few red spots like this, it really hurts you because you don't have the entries that are making any moves in your favor to help you. Now, let's squeak back and we're going to take a look at what happened here in going through. I'm going to just try and run through this as fast as I can here. Let's take a look at the quick view here on the Aussie. This is the week that we had here. Okay. And let me sweep back over. Started out okay. We had a first move, wrong move. That's what this FMWM stands for. And of course, the L is mean we went long. So we had a first move, wrong move, sit setup scenario. And if you don't know what that is, there is a video on it. So we went long at 93.87. We got 17 pips out of it. Then we did a buy stop long on the next day, which hurt us because it went up and fell back down. Now, we went to go short on Wednesday and Thursday. Let's take a look. On Wednesday, yes, it did get short. Thursday, it did go short. Those were correct in our entries to go short. However, we never got filled we missed it by 3 pips on Wednesday at this 93.87 when we were looking for the 93.90. And here 93.31. I believe we were looking at the Lone Ranger. Let me see. Yep, looking at the Lone Ranger up there at 93.58, getting underneath it a little bit. Nothing happened. And then we went on Friday looking for the reversal at 92.67, no fill. And to make a long story short, that's basically what happened throughout the week with all the rest of our pairs. So I'll just leave it at that because I don't want to bore you with going through all of these entries. There's quite a few entries to go through. But as you can see, there are a lot of zeros throughout the week. No entries. That really was. Now, fortunately, things caught up with us. We did pretty good on Friday. The one thing that really I didn't like about Friday was right here on the Kiwi. We had a long entry at 84.60, which didn't fill by us one pip. I mean, it reached 84.59, but we needed more than 1 pip to meet our spread with our broker. So, and if you're trading with a broker that does that does fixed spreads, you really didn't have a chance because I believe a fixed spread on the Kiwi with some brokers is as much as 6 and 7 pips. So you would have had to put in an entry 6 or 7 pips above the 59. It was a little too tight. I probably, if I had went to a 84.61 or so, would have had it, and that would have turned out to be a really nice trade. It would have been some 80 some 80, 90 pip gain we would have taken. Let's take a look at the Kiwi real quick at the 15-minute chart so you can see what I'm talking about. On the Kiwi, we need to switch over to our charts that's going to have the levels from the quick view. Here we are. This was Friday. Look, see down here? There's the number, 84.59, this gray line. It touched it and took off. Then it went to our short, which did get filled at 85.28, 20 and 29, and ended the day with a small gain. But if both of our entries had gotten filled, you know, we would have gotten the bottom and the top. That would have been a creamy, delicious trade. Unfortunately, we were a little on the greedy side, and we know the rules about being greedy. We don't want to do that. So that's a lesson learned. And we all, no matter how far into this game we get, there's always going to be some times when we make errors. It's plain and simple. Okay, let's get on into the review and forecast for the week ending of August 1st, 2014. Starting out with the Aussie. And as you know, last week we looked at this tweezer top at the top of the range. We said we're going to see what happens when it goes under, and that's exactly what happened. Now we're at this position here with a support level. And at the support level, we're going to see whether or not we can break it. We've still got a little more support down underneath that again, around this 92.20.21 area. Our support level at the 92.80 held. It didn't break it with a close below it. It dipped a little bit and came back. So what do we have to look forward to? Well, let's find out if things are going to push its way back to the top without breaching this low, because we have broken below the trend line with a close. Okay, the next thing we're looking for is the price going to drop below this low? If so, there's still support down here at this 92.20 area, because it's a channel that's been developed so far at this point. So we have to be cautious about those levels. We want to keep an eye on the levels on the Aussie at 92.21, and we want to keep an eye on this low at 92.74, whether it gets broken or not. So that's where we are. We're heading for a new move. Definitely, we're in a situation where you have to take close attention. Okay, let's move over to the euro, and as you can see in the euro, we're continuing the downtrend. With the exception of this hammer at the bottom, we might see some moves come back. However, we had a hammer here, but it was early in the move. We've got some movement going to the downside. Let's take a look at this low that it responded to. Actually, this area here is the 125 profit. That's from the Fibonacci. Let me show you. I'll put this Fibonacci on here so you can see what I'm talking about. From this here, from this high to this low, you retraced at this 382, which would have been a beautiful entry. 136.96. And if I'm not mistaken, we may have actually had that in there. But the point is that your targets for these types of trades, when you get these retracements, target number one obviously is back at the point of support, which is here, and then your second target is this 125 area here. So that has something to do with why the price is supporting there. But let's take a look across the board and see if we can find any areas that support this move in terms of a support level. Let's draw a line in here and see what we get. Now let's watch this line. Let's give it a color that we'll recognize so that we There we go. Nice blue line. Stand out. Look back here. Well, there's this little support that it broke through. Again, this was resistance that it held to. Again, resistance that it held to. That then became support here. And now we're double bottoming. We're going to come back and take a look at the relative strength and see how that worked out. And again, support, resistance, resistance. Oops. All right, so yeah, this is a level that has some substantial, or should I say significant meaning to it. Oh yeah, look at this over here. See? Look at that. And look at that. Yes. All right, so this level at the 133.78-ish or so, that has some relevancy to it. So we're going to take a look at that and consider it. Now, let's go back and see this double. Well, that's not a completely a double bottom, but it's almost there. So, but let's look at the strength. Let's look at the relative strength and see what we get. What are we looking at? We're looking at bearishness. We're looking at a loss of strength. It's taking place here. It's doing what it should. It's definitely a bearish. The strength is very weak. It's moving down. So we are still bearish. So what we're going to do is look for resistance. There will be probably a moment if it breaks this top where it'll spring forward and look for a place to go. Now, of course, there is that possibility based on just the fact that the market, oh, this is what we need to do. This is the other thing we need to make sure we're aware of, and that, oh, we've already got it, our Fibonacci retracements. We've already broken a 25. We're underneath it, so we're going to come looking for it again in terms of resistance, and that is roughly around the 134.90 area. But we're also going to look for some more support somewhere around this 132.35 area at the 382 Fibonacci retracement down here. So basically, in the long term, we're looking at the euro rebounding and correcting momentarily. We also have this crossing trend lines here at 135.64. That's a good spot, and I'm looking at it across the historical lines, and yes, it could turn out to be a good place to take a short. And we're looking at a target down here around this 132.39, 132.40 area. Let's move on to the pound. And yes, we have broken. Remember last week we had the close below the trend line, and now it's broken it very well. And we've also closed below the support level here. We have coming up, next support level target is going to be somewhere around this 165.98, 166 we might as well say. And we'll see how well that support holds up. And we did talk about that for the last couple of weeks, actually, with this 25 Fibonacci retrace. Now, actually, Gann retracement by it being 25. We're looking at, that being a fast track type of rebounding support level from the fast track bullish move that we've had for the last 13 months. All right. The Kiwi has closed below this running line. Actually, it's not even a running line. But we did close below it. We're going to look for those lows. Remember, we are coming off of all-time highs. This could mean a deep correction, or it could mean continued fast support when we break those highs. So we have not broken the previous low yet. But if we break this low, we might see some turning back to the downside. Of course, it'll probably want to correct first and maybe come up to this 85.79 before coming and meeting with this other trend line and this support level, we might create some little consolidation right in here. We'll see how that plays out. We just have, as usual, we have to watch it. See, we always keep in mind, we're looking at weekly charts. This is long-term analysis right here. And in between those weekly charts, we've got 5 candles of day charts. You know, we have to remember that when we analyze the market, we analyze the market fractally, meaning that from the what's going on in this long-term weekly chart, we find ourselves breaking it down into shorter terms with the daily chart. So we go to a daily chart from here, and this is what we see. Now from this daily chart, we break that down to a 4-hour chart. Now between these two lines here, we're looking at a week. All right, where before on a daily chart, this is a month in between our dotted lines. And on our weekly chart, this is a year. So let's look at this year. We've had an uptrend that's been taking place and reached all-time highs on the weekly chart. Now, when we go to the day chart, let's zoom it in a little bit so we can see the whole year. This is the beginning of the year. See how it becomes, you see a little bit more action, okay? And then from there, we go to the 4-hour chart. Every week we see what's happening within the week. Now this is a good correlation, is looking at your 4-hour chart and your weekly chart, because the weekly chart, this single candle on this weekly chart right here, or any of them, let's take the last 3 weeks, 1, 2, 3, right? This is a weekly chart, 1 week, 2 weeks, 3 weeks, and we'll include 4 weeks. Now we go to a 4-hour chart, and between each dotted line is 1 week. So this is what happened inside of those 4 weeks, 1, 2, 3, and 4. This is the week that we saw where it had the one bull candle. Then we saw the bear candle, bear candle, bear candle. But inside that candle, this is what we saw, and this is how it played out throughout the week. You see, fractal analysis is extremely powerful and extremely important to learn and know how to work. So let's move on. That's just a little lesson in there. Let's move on to the next so we can finish this review and evaluation. Now look at this cat. No, this is the CAD. It's broken its resistance at the 108.60 and it's closed above it. This is all bullish positive signs. Now we do have this mark of the 50% retracement on the downside. So it's double topped it, as you can see from here and here. Right, that's exactly right. We're going to put a little strength behind it and see if we have divergence or convergence with this. Put in our markers so that we can see this top and this top. They appear to be equal. There is no divergence. So that's strong. That's a good thing. We've got a good thing going here. However, we're looking at a much longer term. We'll probably see the possibility of this move becoming weak if it continues in its uptrend, because we're seeing a little bit of a problem with this area here, with these lows climbing and its strength not gaining. And now look at the low that's much higher than this low, but the strength, it fell much deeper than it would have here. Now that's something to look at, but we've had some strong support. The bottom line is right now the dollar CAD is in a move to the upside. Bottom line. Now let's take that quick lesson we took before about the fractal analysis. Take these last 4 weeks that we've seen here with the Canadian dollar and shift them into a 4-hour chart. And look at the last 1, 2, 3, 4. See how it moved. Double bottom, triple bottom with strong, look at the resistance, not resistance, but the strength of these bottoms getting stronger and higher until it took off, right? And so we took off these last 3 weeks. Now, we had a slow beginning of the week in this previous week until right at the end. And that was pretty much news generated. But then we finished off this week. It just continued to work its way to the upside, leaving us behind actually with quite a few of our trades on the quick view because we never got much of a retracement this week, as you can see, until later on we began to retrace here as we reach these highs. All right, the Frank is in an up move. I had to put a trend line to the upside on this since we broke this short term here. We broke these resistance levels, and here we're outside of this consolidated gray box channel here, closed above it and broke it. Now we do have this long-term trend line that we have not gotten a close above yet. So, you know, in the meantime, I would say, and even though this teardrop here is still an up move, we just expect that we'll probably see some retracement. So we could look at this 90-11, 90-10 area, see how that, it might come back to that and look for a way to find its way back into the bullish territory. So once again, we're looking bullish on the dollar at the moment, and same thing with the yen. Now, here we are. We're close here. Now, what we need to see this break this high. We need to see it break this high. Otherwise, it's a head fake. Okay, because of this wedge that we have here. But I'm telling you, like I said last week, this support line right here, this 101, is strong. Oh my goodness. And I know for a while I was looking at it in a bearish tone because of its small range and how it just kept being pushed down by this trend line and squeezing. I mean, we're really squeezing this yen out. And we talked a few weeks ago about how that pattern has happened in the yen a few times, where it would linger for such a long period of time before it would do some type of breakdown or breakout. I think I zoomed out a little bit too much, but as we talked about that before, where it would go into these patterns of just small range and tight moves, like right in here. It was a little larger here, but you see how long we've had this going on here till it broke out. So let's see what we do, see how this works out, see what goes on. If we hit this 103.75 area and start coming back down and eventually break 101, look out. We're going to come crashing back to maybe the 98.13 or so. But we got to keep an eye on it. First thing we're looking for is breaking this high of 103.08. That's the bullish move that we want to see. Otherwise, like I said, we might be looking at a head fake. Okay, that's it for the weekly review here in August, ending the week of August 1st. We're going into a new month of August, and we've got some things turning around by the way it looks right now. We're in some transitional stages, which can be very tricky, so be very careful. Keep an eye on your quick view and remember the big picture as well of what's going on, and that will help keep everything in line for you so you can be profitable. Well, I am your Forex University Professor here at ForexUniversity.com, and I'm wishing you all the best in your trading, that you are always profitable.